skin is a critical part of like how we function.
I don't know why I was putting so many chemicals on my skin.
Benzalkonium chloride, what is that? I don't got time for that.
I started using Dr. Squatch, an all-natural soap for men, and I stopped using deodorant. It's an incredible thing to not have to put something in your body that is foreign to your body.
Dr. Squatch is probably the most unique soap I've ever used.
There's no harsh chemicals in their soap. They are made from 5 natural oils. Look at this. It's great.
And this pine tar, it exfoliates the skin. It smells like being in the woods.
People, they think I'm wearing cologne. I'm wearing Dr. Squatch.
I literally feel like I'm in a forest.
What are they getting, a free ad here?
I like to actually
Gee
have my
whiz.
skin nourished.
Hey, good morning. It's 8 a.m. and I'm already coffeeed out. Some people start their day at 8 a.m. What losers. Bunch of losers. Huh? Go to their day jobs. How many people in America are commuting to their stupid jobs right now? Well, I guess it's better to have a stupid job than no job, right? So anyways, good morning. How you doing? How you feeling? Dollar's ripper strong right at the beginning of the month. Is that plausibly profit taking? Could be a rabbit, could be. Marina said, hey, gold was a great buy yesterday. Hey, you're welcome. Yeah, you're welcome. Well, remember, Marina, it's not a gold call. It's a Central Bank of India call. Right? So that's the cool thing, right? That's the cool thing. Understanding the why before it happens, not that just that it's going to move or whatever, but whatever. So anyways, hey, good morning, everybody. Welcome to Forex.Today. We are now more than 18,000 foreign exchange traders. More than 18,000. Wouldn't that be cool if we can get together? Wouldn't that be great if we could get together in one space? Lewis says, hey, rotation out of mega caps, dragging futures down. This is awesome. This is awesome. We talked about this 2 weeks ago, I think. 2 weeks ago. And what we talked about is I want the stock market to fall in May so I can buy it. Think about that. 3, 2, 1, hit it! All right, let me remind you that trading's risky, not appropriate for everyone. Your past performance, good or bad, is not necessarily indicative of future results, but please stay small, stay humble, focus on the long term. Never risk money you cannot afford to lose. Good morning. My name is Wayne McDonald. I'm a currency trader. I'm a chief FX market strategist for Traders Way, the leader of our community here at Forex.Today. May the 4th be with you. Here we get together as a community of 18,000 foreign exchange traders, and we focus on trade planning, both technically and fundamentally. And if we need to, we address trader psychology issues. So if you got an issue, if you got a problem, I'll solve it. Check out my hook while my DJ revolves it. I got 99 problems, but a pip ain't one. Right? So make sure you ask questions, get involved, right? Write things down. I preach to teach because some of you never had this. So we'll go through the charts today. In particular, I want to go through the yens. They're at key levels, which I think are interesting. Remember when people used to say the internet? Like, no. There's an internet, but not an internet. So anyways, ask questions, get involved. Hey, you need a broker? Traders Way has earned my loyalty and respect. Why don't you give them an opportunity to earn yours? Tradersway.com, bottom right-hand corner. Click the button that says open a demo account. 22 seconds later, you're thinking, should I download MT4? Should I download MT5? You might be thinking, should I have a variable account? That's what I like, the variable spread. Okay. Some people like fixed spreads. That's particularly good if you're scalping. Some people like ECNs. That's great. Do the ECN. That's hard money versus soft money. That's all good. Wayne, you need a haircut. Really? Yeah. I thought I got pretty for you today, though. I put an extra woof. I gave you the extra, what do you call it? Waff? There's a word for it. Cool. So anyways, let us get going. Oh yeah, I was on the Fred today. I like this one better though. Case. Schiller can't spell today. I like this one better, I think. No, that's not the one I wanted. That's the one I had. Actually didn't do that one before. Anyways, just messing around. Housing prices. All right. Kiwi getting blasted, all that kind of stuff. Yen getting strong. This is the one I want to talk about. So profit, Aussie coming down, pound, Kiwi coming down, CAD coming down, right? Funding currency strong, right? Swissy strong, dollar strong, yen strong. So you have to ask yourself, is this risk off? Is this the end of the world, or is it profit taking? So that's your decision. You can freak out, the sky's falling, and if you should move, right? Or not. So it's a time frame decision. But I want to look at the yen pairs specifically as we open up today's webinar. I want to show you these key levels, which are interesting. So I'm going to change all of this. And I guess I'll throw her down on Confluence. No, I'll just do monthly. That's the exact price you'd expect. Let's change this one. Template. Monthly. It was monthly. Okay, exact price you would expect. Let's do this one. Monthly. Exact price you would expect. Look at that, to the pip. Change this out. Monthly. And in the zone, not a perfect little front run. And then we'll switch this to monthly too. Okay. And you'll see they're rolling over at exactly the prices that you would expect. So again, one of the things we were talking about not yesterday, last week, is when many of y'all, maybe all y'all, were sitting on big profits. Okay? You're sitting on big profits. And I think a lot of people were very confident in what they had. So, like, imagine the conversation going on in this area. All right. So, all right. So, let's see if it's any better. Okay? Does that make sense? I said, why do I have to take my pants off? And I guess, well, okay. But I would never do that again. So let's go back to Forex trading. Okay? What did you gain at all from the decision making of whether you should take profit or not? Okay? And remember, one of the major challenges that we have as traders is to always see reality and not confirmation bias of our bias. Okay? And when you trade other people's money, when you trade OPM, other people's money, you have to understand the value creation that you are offering is knowing when to hold them, knowing when to fold them, but are you running away? No, probably not. Okay? Okay? So, anyways, May is a very important time of the year. Okay? And what you're trying to do is you're trying to put a couple of different things together. The first quarter was sort of up and down, but mostly down. And then we're saying the second quarter is going to be up and down, but mostly up. Okay? And many of the folks here are learning how to handle these periods. And it's very, very difficult when you're used to being on a 15-minute chart mostly versus looking at this with weekly candles, let's say. Because, if this fell for a week, if you're trading weekly candles, you're like, oh, look, one red candle. Where someone on a 15-minute chart will have an entire down week, and it'll be huge for them, right? So anyways, ask yourself, has anything fundamentally changed? And if not, where are we in the cycle? Okay, so for example, as I said earlier, lots of traders of the stock market do things like sell in May. How many people have heard this truism? Sell in May And then what? Sell in May, and then what? Then go away, right? So what does that mean to you? Think about it. What are they talking about? They're talking about the stock market. So they sell the stock market in the first 2 weeks, and then you buy the stock market in the second 2 weeks. Could you have a basic strategy like that if you're like, well, that's the truism of the stock market, so May 1 to May 15, okay, stocks come down, okay, yens come down, okay, US, let's say euro and pound, Great British pound, let's say pound, Great British pound, and Aussie come down. Why them? Because the dollar would get strong. Okay? For a week or two. So if you had that in the back of your mind, is dollar strength and yen strength and Swissy strength a sign that the sky is falling, that it's the end of the world, that capitalism has failed? It could be. Things are not good in Europe, and they're horrible in India. So what do you think? You have to analyze all of that. Is the sky falling? Okay, is this a fundamental, has there been a fundamental collapse in global macroeconomics? If yes, then it's pure risk off and it will fall for the rest of the year. Well, Johnny, it could be $5 trillion the other way too, right? So anyways, so I don't know. What would you do? This is what I keep trying to teach you. Okay? So I hope you write this stuff down. Because if you don't think anything fundamentally has changed, and if you think there's going to be an increase in global economic activity over the next 6 months, then, right, in the next 4 weeks, you'll be a buyer. And write it down. What will you do next May? Do you ever leave a note for yourself? You should probably keep a forward journal. So April 30th, 2022, you open up a forward journal and you have a note to yourself. Dear Wayne, you look fabulous today. You're good enough, you're strong enough, and gosh darn it, people like you. By the way, take profit. Stock market's going to come down in the first 2 weeks of May. Book some profit, buy some dips. And lose 3 pounds. Okay? What do you think? Okay, well, yeah, you just took profit. The decision was really last week. But I know what you're saying. Cool. Hey, that would be very unorthodox. Cool. Yeah, so we'll see what happens on these pullbacks. Okay. Okay, but I want to point out M3. Okay, let's do some labeling. Let's do some labeling. We'll say MM3. Let's be very specific. I don't think I can, right? No. How do I say? Shoot. Would we hear? Mm-hmm. And where we've been and what we've been through. Ooh, doo, 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 doo. Okay. By the way, one of the things I teach you, I guess maybe we should have them all on daily. One of the things I teach you is that if you're simply a bull or if you're simply a bear, you will catch these. It's when you're trying to be both that you'll probably miss. Okay? Because you'll say on this chart, nothing existed on the chart to tell you this was going to happen. And I say, I know, right? They're like, boy, I would have been great to have known that it was going to fall. I'm like, I know, right? Here's the thing. If you're a bear, you're going to try selling these M3s. If you don't do that as a bear, you just don't really know how to swing trade. That's all. Right? As Brinsley says, you have to do your damn job, right? And that's what I teach you. Like, if you're a bear, that's your job. When you're not sure and you're trying to play both ways, yeah, you're not going to be consistent because you're not trading consistently. Okay? And the frustration of trading like this is on bullish months, you don't perform well. And on bearish months, you do perform well. But that's probably better than how you traded last year. Okay? You're like, well, Wayne, I had 7 profitable months this year, right? And 5 months where I didn't trade. I feel bad. You know, like, let me get this straight. You had 7 months where you were profitable and 5 months where you didn't trade. And then you feel bad that you didn't trade against the market those 5 months. Well, you're not supposed to trade against the market. Notice that at the end of the year, you'll be profitable. Okay? And that's a good start for many. Okay? Cool. So now there's panic, right? There's panic. There's blood in the streets. The yen is strong across the board. All right. Well, if you didn't plan for this to happen, I bet you anything you're not planning for what's going to happen next. What is going to happen next if you're a bull? What's going to happen next if you're a bull? Yeah, but you have to understand theta, we do that in a training course. We go through that. We go through all that in the training course. Just sign up for the training course. Okay? So it's not that you buy, because when you say buy, it sounds, it's not specific enough. I don't know. It's more like be ready, willing, and able. Okay? Retrace to the central. I don't know. The central isn't that important to me. I should be clear. The central pivot is not that important to me. It's okay, particularly in very aggressive trends, but we're sort of at the end of a mature trend that's lasted for a full month, right? So, nah, I don't really care about that one that much. It can work. It can work, but it's not the most important one for a bull. It'll do. Okay? So what's a better one? Okay? Well, let's filter this now. First of all, I want to see who the bulls are. How many people are bullish on the yen pairs over the next 3 months? And Brinsley, I don't really care about S1 that much. It could be it, but I don't really care about S1. Okay. How many people here are bulls? Type in the word bull. Bull or bullish. Bull. Bull. Tell me bull. Who's a bull? Bull. Crypto says I would be bullish in August. Yeah, that's probably early, but I'm okay with that. Okay. Good. Lots of bulls. All right. So let's change this up. This is for the bulls only. If you're a bear, ignore this. That's the secret to trading, by the way. I'm going to go to position trading bullish bias. Position trading bullish bias. Position trading bullish bias. Position trading bullish bias. And position trading bullish bias. Okay? So, let's drop into an hourly chart. Oh, so there's my buy zone, my green zone. My green zone. I have permission to engage. Okay? That's strategy now. Now your tactics are to use your technical analysis. Okay? If you love the 15 so much, now you get to work. So now you would plan, when do you buy it? Do you buy it now and jam a stop? Do you wait for a double bottom? Do you wait for a higher high? Do you wait for a double bottom of a double bottom? When will you do something? We know the price. Price number 1 is 84. Price number 2 is lower. So you got a job to do at 84. Okay? For some people, this is a whole trade. Okay? Great. So, for others, it's a sign to get to work. So, what are you looking for? Okay? Are you looking for a 5A cross? Is that what you're looking for? You're looking for a 2155 cross? Are you looking for, how should I do this? A pattern? So let's try to put this in here. Okay, what kind of pattern? Are you a buyer here or are you a buyer here? You'll notice they all line up and they end up being the same thing, just different measurements. And then, of course, if this is crossed, your MACD is also crossed and is above the waterline. Okay? So unorthodox is, well, a bit of everything. Well, they're all the same. I only see one thing. Okay? I can tell you Stokes is up in a situation like that. MACD is up above the waterline and rising. Okay, moving averages. And the moving average, because they've crossed over, the candles have done something. So you got the moving average strategy, right? You'll have a candlestick, right? You'll have the candles. The problem is, most people don't know that this is the price to make a decision. And all this other stuff are different measurements of time at this price level. Brinsley says Fibbo. Well, you're planning a reversal, and a Fibonacci is a trend tool. So I might use it on the retracement in the 1, 2, 3, but I wouldn't be using it now. Okay? Okay? But they're all just different measurements now of time. It's a timing issue here. But remember, they're lagging. So your alpha here to get ahead of the lag is that in advance, okay, based on your use of a leading indicator, in advance that this is where a decision must be made, at least the price. You're like, okay, we got a right price here. Now it's time to get serious about looking at this other stuff. And then you say to yourself, how could I use these tools to help myself get into this trade with the least amount of risk possible? And so you could just buy it now. That wouldn't be the least amount possible, but you could do it. It's a low alpha strategy. You're essentially betting that it fell, hit 84, and you're like, I bet you it'll go up. Well, you won't last very long in the game, but you might get some big rewards here, right? And then blow up your account next month, right? But whatever, you could do it. Then the second thing is, how could you look at a change in moving average, a change in Stokes, a change in MACD, a change in sort of the behavior of the candlesticks, which is a form of price action? How could you use these to make the decision of to buy or not to buy at this price? It's a buying price. Okay? You've made that decision. That's a strategy decision. You made that long ago. So now it's like, this is a good price, but when do you pull the trigger? Okay? Your two leading indicators are price action and pivot points. Okay? So you got pivot 1. This is plausible entry number 1, or A, let's say. And plausible, let's go out to an hourly maybe. And plausible entry number 2. So you got plan A and plan B. Plan C is this drops in the next 10 days to monthly M1 and you catch a counter trend trade. But that's not even in the cards at the moment. If that's going to happen, you'll probably have 1 or 2 losing trades in which you then have to wait. Significant, right? So you basically have a trade here at 83.50 and the other one's 84. Okay? Plan A and Plan B. How many people here think it's going to fall to the monthly M1 first? Well, if you think that, you're probably not a bull. Okay? So how about this as a way to trade it? You buy it. What if you bought it at 84 and your stop is at 83? Some people here have never had a 100 pip stop. Just lower your leverage. Just lower your lot size. You'll be fine. If you say to me, Wayne, I really think that's impossible. You say, Wayne, I'm looking at it and I understand some seasonality and all that kind of stuff, but I just really, really don't think that's going to happen this month. Okay, well, that's one way of doing it. 100 pip stop's no big deal, as long as you're going for 300 pips. Okay? So if you lose 100 to gain 300, is it worth it? Is a 3-to-1, well, actually it's the other way around, right? Risk 1 to gain 3. Is that enough for you? Okay. Now you'll say, well, I don't feel comfortable with that. So then you look at it here. It's either going to bounce up or it's not. Okay? Or it's going to bounce up here or it's not. So now you could have two smaller trades on smaller time frames, picking it up off of here under certain circumstances. And right? And you try to then manage the risk on each one of these. Of course, if you're trading reversal patterns at these levels of support, you'll probably get an opportunity to reduce your risk. So if you normally risk 33 pips, right, after 4 or 5 hours, maybe a 12 hours, maybe after a day, you can move it to -3. Probably would be able to do that. Okay? Now, the problem with a lot of traders is in this period of uncertainty and volatility, quite literally bulls and bears going at it, that you make 27 trades in here, not 2. Right? And I'm like, hey, what are you doing? And they're like, it's chaos in here. It's everyone for himself. Just fire, shoot, 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 stab, 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 slice, just, right? You're like that guy in a video game where they're just spinning around shooting everything. Or have you ever played foosball? Or in France, they call it baby foot. You ever play that where some idiot is just spinning the little football player around, he's just spinning it? I'm like, dude, you're an embarrassment. You almost want to punch them in the face. But I'm not a violent guy. But, you know, it's just someone just spinning. I'm like, what the hell are you doing? Play the game right or go away. If you're just in here just buying and selling and buying and selling, and you're like this, because like think of it, this is a monthly zone. You could be in here for 2 weeks. Yes, Marina, and no, I did not punch them. They deserved it, though. But I'm a lover, not a fighter. But don't piss me off either, right? All right. Cool. Marina taught me how to be a kind person. Thank you for that. All right. So this could be a month. Do you understand where an amateur trader could just get destroyed in here? Why? Because they don't know if they're a bull or a bear. And this could go up and down and down and up and break out and up and down and around and break out and break out and break out. And 27 trades later, they're like, screw this Forex thing. It's stupid. Meanwhile, we could say, oh, well, there's only 2 trades here. 1 or 2. Judge not, for he may judge himself. You are not. There's a Metallica song going in there. Can't figure it out, the words. I think it's Wherever I May Roam. Cool, right? Can you see? A calm, studied research trader would say 1 trade potential 1. And if it falls because of your conservative entry, you'll probably break even if you're wrong. And you'll try it here. If you get this wrong, because of your careful entries and all that kind of stuff, you won't be very wrong. You'll probably be break even. Maybe you'll lose a little bit. Not a big deal. Okay. Right? So, but what if you get this? Like, if you're right, how right will you be? And if you really maintain yourself in here, sorry, I'm just trying to get a different point of view. Okay. If you maintain your calmness, if you get this right, you'll be just fine. And I want you to trade that way. I want you to think that way. Okay. When we look at this, I would trap this sucker. Okay. And now what I'm thinking is, if you buy it at 84, we're on our way to 86. It's not even a big trade. It's a tiny, pissy little trade. That's really small. Okay. Okay. Here's the thing. I would probably end up keeping this one through May and into June, because one of the things we talked in the swing trading group about, I think it was last week and the week before, of this idea of market like this. Let me start down here. I'm not looking at Aussie yen specifically, so ignore the chart here, but we're looking at like price action like this. Okay. And what I'm suggesting is, May, this was April, this is the beginning of May, and if I can get the beginning of May correct, right, that I'm going to play this. Okay. Okay. And in fact, you'd have April, May, June, July, and then consolidation. So I'm actually trying to think like, let me say it like this. Maybe like May 15 to July 4th. That'd be cool. Okay. So am I a buyer on May 4th? I don't know. See, I don't know the timing. I know the prices. So it could be May 4th to July 4th. Okay. But when you study the seasonality, one of the things you have to incorporate in your analysis is, what if all of May is like this? Okay. Well, that's why we have to do our analysis. Okay. This is going to be approximately monthly S1. Why? I can do the math. Isn't that nice? Look at it. Dude, that's about monthly S1. All right, great. And then we have this going on. So, okay. So I have to break all of this down. S1 is going to be R1, which is about there. Okay. And I have to think about what are the probabilities. And here's the thing. Okay. Here's the thing. What do I want? What do I want? What do you want? It's not even a want, but like if you expect an outcome, then what kind of technical analysis would you want to see to confirm that you are correct or deny your hypotheses? Because I want to know that I'm wrong, right? If I'm wrong, I want to know quickly. Okay? One of the things we work a lot in our live groups are, how do you know you're wrong? 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 Being right is easy because you think you're right. You've done some research. You're like, based on my research, this will go up. And then it goes up. And then you're like, well, I know. It's supposed to go up, right? Like, there's no glory in being right. If you don't know what the outcome of your trade is, you're not planning. You have no research. You have nothing to back it up. Okay? Then you're just basically a degenerate gambler. Okay? So if you think this is going up and then you buy it and it goes up and you make money, it's not that big of a deal. You're like, well, I just bought the dip. I'm supposed to. This is what I do. I think the Aussie yen's going to go up. And so I bought it at the monthly pivot. And 3 weeks later, I'm up 200 pips. And you're like, there's nothing special in that. Trading should be easy. How do you know it's going to go up? Well, you've been doing months of research on macroeconomics and you formed a bias, and now you use technical analysis to buy at the right price at the right time. Dude, it's not that complicated. You've done all this research. Now you execute the plan. It's not complicated. You might be making it more complicated than it really is. The complicated, challenging part to being a trader is to know when this analysis that you've done is wrong. Because you have confirmation bias. I have confirmation bias. Okay? So it's really a struggle to maintain the ability to see reality. But if you're not even looking, then there is no reality. Right? Okay? So, for example, will I lose a large percentage of my portfolio if I only trade a situation in which, let me do this in a slightly different color, okay? If I buy in a situation that looks something like that, or a situation like that. Will I lose a large percentage? No. But I will avoid trading all over the place, so I will not do that. And of course, if it's below my buy zone, I will stop. I will stop. Not analyzing. Okay? But I will have to stop until I see bullishness. Okay? And that could be a M1 counter trade. That could be an S1 that sets up an R1. So now that's a monthly R1. And so I have to set up an inside month with an assumption of a breakout because of my understanding of seasonality. But my number one goal is to not lose a lot of money. I don't care about losing a trade or a couple of trades. But 27 dog with fleas is a pack of wild animals I don't want to be surrounded by. Okay? That's a lot of vermin. So I handle that through analysis. Okay, so going back to my plan, I'm going to look for something like this. And if I don't get a reversal pattern, it's because it'll probably, think of probability now, it would probably fall further, and I would watch for a reversal pattern here. And if it drops even further, I say, oh, that's interesting. Maybe I'm wrong. You see the difference? Holy schnicker. Maybe I'm wrong. Now, when you trade like this and you're wrong, very often you don't get an opportunity at 84. You don't get an opportunity at 83.50. Now, you probably do, and you jam your stop, and then you get knocked out. But whatever, depending on your time frame, right? But you're never in a situation where you're going to have a bloodbath, because you don't buy 84 unless you get an opportunity, which is simple technical analysis. If you don't know how to enter your trades, then now you got to fix that. But if you know how to enter your trades, it's not that complicated. Okay, and then you're here, and if you get a setup, you take the setup. If you don't, you don't. And if you don't, it's because it's falling further. And now you know to go to red flag, shields up, red alert. Right? And then if it's dropping even below 83, now you're like, oh my God, I'm so glad I didn't load the boat here. Oh my gosh. Well, it's still early in May. I wonder if it'll hit M1 and give us a counter trade setup. And meanwhile, now you're just letting it fall, letting it fall, letting it fall. No harm, no foul, right? And there's no blood. Or you let it hit here in reverse, and now you're like, well, I'm going to let it prove to me that the market has turned bullish. I'm not just buying it because it's low. There's a high probability that this is not a dip, but instead a drop, and I'm not interested in that kind of risk. So I will wait. And I will wait until the market proves to me that I get what I want, and that is a bullish market on the smaller time frame, because I'm planned out the longer term. And I think, so let's say now it's May 22nd. And I'm like, I think this will be higher by July 4th. And here it is, the third week of May, and I'm way down here at 81.50. Do I buy it? Or maybe I'm testing 80. I don't think it'll fall that far, but now I can say, well, do I buy the third week? Why? Because maybe something fundamentally hasn't changed. Just things have technically changed, which shows things like profit taking, rotation of portfolios, all this kind of stuff, or simple seasonality like sell the stock market in May and go away. Well, if a lot of people sell the market in May, then at the end of May, the market should be down, in which I will be a buyer. So I might do the opposite. I'll say buy in May and go away. But someone else has to sell before I buy, right? So like you just let it happen. But has anything fundamentally changed? I don't know. That's your job. Okay? But notice, and again, this isn't a message to my swing trading group. Notice and remind yourself how important the beginning and the end of the month is. It's amazing if you think about it and go back. Many of the trades started on the exact hour and lasted the entire month and ended on the last day or the day before the last day. You're like, that's incredible. So what will you do next time? Okay? Okay? So hopefully that's helpful, guys. Hopefully. Okay? I hope the dollar comes out of this weaker than ever, because it just started that process. So there might be a lot more to go. So you have to ask yourself, if it heads up, would you buy it? If it heads up, will you buy it? I guess down here, if it heads up, would you buy it? Okay. Shows you how awesome CAD has been. CAD is still way the heck up here. Well, everything else is already in the buy zone, like approaching the buy zone, approaching the buy zone, in the buy zone, in the buy zone, and way above the buy zone. So, are you going to buy CAD first? Okay. Okay. How about let's deal with the psychological level for euro. Let's say psychological levels are important. Okay, here's 130. Pivot points, which are dumb, by the way. Pivot points are dumb. They just look at last month and predict this month. Doesn't make them smart. It doesn't say, ooh, well, what about the psychological level? Okay, so how would you handle if we were down here? Well, that's this month's S1. How do I know that? I just did the calculation. Okay, so, at what point, if it bounces around there, do you get in? And then how do you handle the R1 target? And are you using the R1 target, right? Or are you going for the June M4, June R2, July M4? Like what is your target? Sometimes it's time-based, sometimes it's price-based. Okay? Your decision-making process is what's most important. So anyways, you decide now, are you going to freak out? And even if it drops below, how are you going to handle it? How much confidence do you have in the macroeconomics? I think if you decide now, you'll handle it better in the future. Because your brain will recognize, and you'll say, well, this is really scary, but I thought about it. Right? So again, let's say euro yen drops all the way down to 130, way down here, even below the monthly buy zone, all the way down to S1. Now, what I said earlier is I don't really care about S1, and I really don't. But it is a key psych level, and dropping to S1 just simply tells me the top is closer on the shorter run, meaning for the month of May. So think about it now. If we're all the way down here, how do you handle it? What will you do? And I always say, write it down. I'd even draw pictures. Draw a picture of the chart. Euro yen drops all the way to 130. How will you handle it? Okay? Or just trade like a chicken with its head cut off and just make a bloody mess of everything. Just go back to doing what you used to do. And you say, all this thinking and planning, mumbo jumbo. Okay? Okay? What makes a chicken run around making a bloody mess after its head's been chopped off? It's nerves. It's a nervous wreck. If you want to go back to that kind of trading, that's your decision. Okay? Trade by nerve. Okay? Yen is getting very, very, very strong. Okay? Unorthodox is why yen weakness. No, right now it's strength. What you're thinking is this your plan? This is going to go up now for weeks and weeks and weeks? Well, let's analyze. What it's saying is right now it's strong. It's been strong for a day and a half. Cool. Well, but it's been weak for a week. So now you're like, well, a day and a half versus a week is bigger than that, right? Well, let's go back even further. It's been weak since the end of March. Wait, it's been weak since the middle of February. So, what do you think about this? This is the Japanese yen versus everything. That's why it's an index. So, down, 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 up, up, roll reversal, sell. Down, 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 up, sell. Down, 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 up, sell. Down, 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 down. So what, you think it's going to do this now? So what's it going to do? This could go up for a whole week and down for 2 months. I don't know. What do you think? What's probable? If you have no idea, you need to stop trading and you need to focus on learning what moves the markets. This is not a video game. This is the supply and demand for Japanese yen globally, which means there's a business need. There's a real world business need. This is logic. This is intelligence. And because it's logical and you can apply intelligence to your analysis, you can predict the future based on research. So what do you think it's going to be, the future is going to be? That's what a trade plan is, by the way. It's helping you be consistent. Okay? Okay. Another way of looking at it is this. Let's try a different angle. Okay. This is the end of February. This is the end of March. This is the end of April. So could it go up and then down? Could it go up and then down? Could it go up and then down? Yet, well, it did. Unorthodox. I want to sell yen. So when you said yen up, yeah, I want to sell yen, but not. You have to be careful. Don't say yen. You mean yens, right? This goes all the way back 1 year. How many people want to buy this? Come on now. It's going up. It's been up for 2 days. All right. Are you going to buy it? Okay. Now, the cool thing is I prepared my live trading group for this well in advance. Okay. We didn't actively start, even consider selling yen until November 1st. So I don't know where that is. Can't quite tell, but somewhere in there. Probably a little later. Okay. Didn't even think about it. Typically, I start to look to sell it around here. Not this year. Or I should say not last year, not 2020. Instead, I said, hold it until this period. And then I think specifically in here is when we started really selling the yen. Okay. Beautiful, right? By the way, there's fundamental reasons. Okay. This sideways painful zone, we talked about 6 months in advance. Okay. And that this is the kill zone. Cool. So now it's going up forever. Is that what you're saying? So what is it going to do? Is it going to go up to here and then fall? Okay, make sure you know what you're doing. What you're doing. So is there sort of, are you playing this as resistance? Okay. You waiting for the 382? Okay. Cool, right? I might look for something like this. Okay. Greg, trading a standard lot with $5,000 in your account is too high. Okay. So you have $5,000 in, oops. You have $5,000 in your account and you want to trade $100,000? That's silly. Yeah, you can make a lot of money, but that shouldn't be your focus. It shouldn't be your focus. Your focus should be consistency. Okay? Okay. In my humble opinion. All right, cool. So right now, these funding currencies are up. Okay. And that's not a situation that I like. So I kind of wait. And I analyze prices in which I might want to buy some of these yen pairs is one way of looking at it. Now, it's nice because all yen pairs need to go the same way. So you can also look for congruency. Dollar pairs, you might be a bull on euro dollar, but you might be a bear on USD CAD, and you get all over the place, right? So looking at this, you want everything to go up, and you know the zones in which you would like to buy. So now you could sit here with the screen like this, and I know it's squeezed in. Get a bigger screen. Okay? Get more screens. Wayne, why do you have so many screens? Because I'm ridiculous. Oh, and I also like to have a lot of different things I like to look at, right? Cool. So you see how you could just sit here now? Make sure you're on the same time frame, daily, 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 daily. Nah. But how about hourly, 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 hourly now? Let's get there. So what are you going to do all day? I'm going to buy or not buy. Okay? No, Greg, I know you've been around a long time. I'm just saying you're talking to a group of amateur traders and you're suggesting that they use high levels of leverage. I have to slap that. Okay? I can't accept that, but you know that as well, right? So it's not really an argument. Okay. So if you want to trade that, Greg, and you got all that experience, cool, you can make that decision. I think for a coach, that would be negligent. Okay, so there it is. I planned out my whole day. By the way, if you're in my swing trading group, today at 2 p.m. I am doing a new macroeconomics lecture. And we're going to talk about money. I'm going to do a deeper dive into business cycles. The last one was sort of an introduction. So we're going to do sort of a deeper dive, deeper into the weeds, discussion on business cycles and how the government plays a role. And then we're going to talk about money. Okay. In particular of just sort of whet your appetite, the quantity theory of money and why your professor in college and the textbooks you've read, if you're an economist, are wrong. I'm going to explain to you why economists are wrong, why they're scratching their head. Where's all the inflation, right? We're going to cover that. So I'm going to make you smarter and taller and prettier. Well, at least smarter. This lecture is going to be so good you're going to lose weight and gain muscle while you watch it. So anyways, good. I guess I'm just going to do commodities. Oil still going up, great. Gold still going up, great. Bitcoin, not quite there yet, but it's on the roll reversal. So if you're a buyer, you got to be interested at 55. Otherwise, I don't know what you're doing. So anyways, everything's doing what we've already said it would do. You're welcome. So there, I just covered that. Lovely. Right? There's yesterday's trade plan. Sweet. Now what? Okay. Well, now you have to decide, are you going for the monthly? Your call. Okay. Typically, this sets up a counter trend on a weekly basis. So that says it'll come back, okay, to, let's say, 1775. But it doesn't have to. And I'm pretty clear about that. Right? I'm very clear about that. So just consider this a $50 move from 1750 to 18. And now what? Make some decisions. Okay. On a monthly basis, you got some time. On a weekly, it's one and done. But notice that on a weekly basis, this is clearly sets up a counter trend. So be careful at the very least. It doesn't have to do it, but the potential rises exponentially. So that's that. Peace on earth. May the pips be with you. May our profits be above average. If you're in one of my live trading groups, whether you're a portfolio manager or whether you're a swing trader, I will see you at 2 p.m. Eastern Time for macroeconomic course. If you're right. So anyways, thank you for being part of the Forex.Today YouTube community. Thank you for being part of Trader's Way as a client. If you're not part of the Trader's Way family yet, please visit tradersway.com and open up a demo account and join us. We're waiting for you. There's love inside. See you later, guys. See you tomorrow. If you're going to join a swing trading group, you go to fxbootcamp.com, sign up for the courses, and then it'll say, hey, do you want to join the live group? And you man up, or you girl up for that. You put your big girl panties on and you join the swing trading group. It's a whole $99 a month.